Good morning. Welcome to Pries Capital. You must be the new recruit.
Oh, is this the new recruit?
Yes, it is.
Awesome. Follow me, Mr. Superstar. Here at Pries Capital, we love showcasing art. The stunning bronze dragon sculpture Kiko by the renowned artist Nano Lopez is definitely a showstopper. And these pieces on the walls, the legendary Michael Godard is practically a rock star in the art world. There's art all over the office, creating a vibrant, creative atmosphere to work in and collaborate in. And here is Tyler Pries, our hardworking mortgage loan officer. If you're looking to purchase real estate in the Myrtle Beach area, Tyler's the guy to know.
Looks like you have your hands full. Ashlyn, can you grab a book for him? And I'll see you at the meeting.
And here's Raj, one of Jason's right-hand guys for commodities trading. Good morning, Raj.
Good morning.
Meet the new recruit.
Hi. Hope you like to work hard and play hard. This is a high-stakes environment. Split-second decisions can make or break an opportunity. Welcome to the firm.
Don't worry about Raj. He's a quiet powerhouse, but he's critical to everything we do here. And here's the founder and real estate powerhouse herself, Tina Price.
Good morning. How are you? So glad to have you with us. Can't wait to see you in action. We're just about ready to start the meeting for Jason's market analysis. I will see you both in the conference room.
Good morning, Jason. This is the new recruit.
Hey, welcome. We're glad to have you here. Your skill set is exactly what we need. I love people dedicated to their craft. But hey, I got to get ready for this morning's analysis, so I'll see you in a bit.
Thanks, Jason. You're awesome. Right here, we have one of our many conference rooms. And down the hallway over here, we have the intelligent and sharp-eyed Miss Jill.
Why, thank you, Ashlyn. Nice to meet you.
Jill thrives in the world of spreadsheets, balance sheets, and financial forecasts.
You'll fit right in, so go check out your new office.
And here's your new office. And over here, we have some welcome goodies for you. Just a small thank you of saying welcome to the family. Okay, so I've got to get ready for the meeting, but check out the gym over here, grab some coffee and bagels in this room to the right, and then I'll meet you in the conference room.
Good morning. Thanks for joining us. Go ahead, take a seat. Welcome back to another morning market analysis. Let's get comfortable and dive in.
We're waking up to one of the most interesting setups we've seen this week. When I look at the market this morning, the first thing that stands out is the range on the 60-minute chart. That range been building quietly, and when you combine it with yesterday's bull trap, the conditions are in place for traders caught leaning the wrong way. And when that happens, liquidations can move price far faster than most expect. At the same time, this isn't a one-dimensional trade. We have gap rules in play this morning, which means patience matters early. Gaps paired with ranges tend to produce two-sided opportunity, not immediate trends. That's why today isn't about predicting direction. It's about letting the market show its hand. And when pressing, then structure confirms. Good morning. Welcome back to another Team Day Trader edition of the Daily Market Analysis. Settle in, grab your coffee, and let's prepare for today's trading session. As always, take a moment to subscribe if you're new and explore the resources linked in the description below. Good morning, good morning. Good morning, William. Good morning, James. I see you on the chat. How you guys doing this morning? Sorry, give me a glass of water. Really quick, what do we got here? I want to start off. There's not too much in the snapshot by Y charts in this morning's market commentary that's pressing. Nothing that I saw that was overly important. So the one thing I do want to talk about, I'm just going to skip over this because I don't have anything to talk about. But yesterday, there's a couple of things, nuances. We'll get to the Fed Watch tool that I seen this morning that I do want to bring up. And a couple of things I talked about yesterday, these mortgage applications, right? And again, it's probably still a little bit too early, but these were pretty, right? these came off pretty decent in mortgage applications. It wasn't like a total wreck for January's from for last week. The other thing that I do want to talk about, because this is going to be play a lot into the Fed watch the Fed watch tool for rates, for interest rate cuts. But one thing that we did at 10 o'clock, we had ISM services PMI was a beat, right? So again, 54.4, and the previous was 52.6, and then consensus was 52.3. So a fairly decent beat, you know, coming in with the ISM, with the services PMI. The other thing that I want to talk about was, right, so here we have services employment, right? 48.9 was last month's, and then forecast was 48.7. And again, anything plus 50 is kind of on the, right, that's kind of like the flip from positive to negative in the ISM, the way that the ISM readings are. And we had a 52.0, which was, again, another positive kind of assessment. And then the last thing is this services prices, right? So we have obviously debt demographics when I'm thinking macro. But again, when I think of positioning in my portfolio, I'm always thinking of employment or growth, I should say, right? Growth and over inflation, right? If anybody goes to the website, right, I have a 4 kind of a quadrant, right, where I'm always plotting, right, where we are in the economy, and I have, right, the X is growth, and then the Y becomes inflation. And are we, right, is inflation positive or negative, and is growth positive and negative, or actually this is negative and then positive. And then I'm always plotting, right, where that is in any given moment in time. And so when let me back that back up. When I look at this, we have prices. So we have employment kind of going in the, you know, what seems to be a little bit in the right direction, contrary to what most people, you know, are talking about, which is, right, we kind of have this unemployment. Now, again, non-farm payrolls tomorrow, big day, but just kind of some of these things that were, you know, and again, here's ADP, and I didn't even talk about that, right? Last month, 29,000, and then actual was 41. Now, I would say that's a little bit of a miss because, right, consensus was 47K, forecast 45, and we hit 41. But the one thing is there's like these positive kind of employment measures in the recent, and then you have services prices. So here we go to inflation, right? And we go from, right, 65.4 down to 64.3, right? So again, just kind of like that check in the box where growth isn't deteriorating and inflation isn't kind of, you know, sticky or in the move. Now, why is that important, and why am I talking about this right now? Is because when we looked yesterday, and again, this is why I look at this day by day, and we're always looking at this. It's kind of like part of my habits of things that I do in the morning before I trade. Is yesterday, if you remember, or if anybody looks at this, right, it was like pause, and this was over here. Let me do a blue, right? This was kind of blue shaded. And, right, we kind of had a cut in January, February, March, April, in April. And then we had another cut, you know, in July. And then that whole Fed fund futures has shifted, to more of a hawkish stance, I would say, where we're now, right, we don't cut until June, and then we don't cut another one until September. So again, just kind of following a little bit of this, mantra of, is the economy kind of falling apart or not, right? Just kind of, just kind of keeping that back of your mind where, and again, just stronger than what you're anticipating, which then puts the Fed on a little bit more pause, right? So again, as we think through these things, we'll just have to, when we're thinking of like the small caps, the Russell, here there was, people are anticipating, and or even like the real estate market, right? Like there's this big gripe where people are believing, whether it's headline news or whatever, and they're not looking at the, information or the data kind of continually, the raw data, just headline, storytelling, but where the economy's kind of faltering a little bit, employment, negative, growth a little bit flatlined, and inflation, and then there's these mortgage rates, yada yada. I mean, I just had a mortgage loan officer on speakerphone with some friends, this base case of mortgage rates coming down, and man, I'm just I'm not seeing that at all. Just kind of like we're in this kind of pause. And structurally, I think we're kind of holding up. Now, what does that mean? Right? It just means, you're just not getting that discount rate penciled into assets, right? So a little bit of coming off as far as asset prices may have a little bit to go. So, right, instead of getting interest rate cuts, what we might get is a little bit of coming in on asset valuations, and that could even be real estate principal, right? So a little bit of coming in on price, right, to adjust, make buyers kind of come in. There is buyers present. I know Tina this weekend is going to do a real estate video on the data. We track that week by week. And again, I see buyers in the market, in the real estate market, and we see buyers, right? Like they're not like major selling, right? But there's just a pause in buying. Well, I was gonna say it. So there's not a pause in, there's buyers waiting on the sideline, and they're wanting to buy real estate. You know what I mean? It's just that sellers are just not in reality, and they got to come off prices. And I don't think we're going to get the mortgage cuts. As far as like the stock market, there is this, as I've talked about before, I think this year will be good for energy. I'm looking at a little bit of healthcare, but that's going to be, picking a spot as the year progresses in healthcare. Definitely kind of energy in this kind of end of last quarter, beginning of this quarter, really kind of positioning. But asset prices kind of coming in a little bit where you just don't get the buyers coming in. And again, at these high prices, right, we kind of need like prices to kind of come down. Same thing in real estate, like real estate home prices kind of come down, and then you're going to get these buyers coming back in. So again, it's not this like economy falling apart situation. Just, we're up on the highs. Nobody wants to buy high. So anyways, my little 2-segment, wrap on the news and kind of my thoughts. But as it pertains to, good morning. Hey, Henry. Anyways, as it pertains to day trading, right? That's what we're really here for. as of 7:15 this morning, oh, that sucks. Can't see that color. As of 7:15 this morning, obviously when I go live with you guys, it's 8:30. By the time I talk my 15 minutes of my rants, my morning rants or whatever in the morning, it's about 8:45. So, but when we were trading, or when I was this morning, it was negative 14 3/4 points. We're now at 7. We are opening out of balance. We're still opening out of balance. There was a net skew, which was basically flat, negative 0.02% net short. So that's, it's basically flattish. And again, that tells me participation overnight was light and not aggressive. So not aggressive selling. And again, I'm thinking rotation first, extension second. The 10-day average to range is sitting at 44.75, same as yesterday. Didn't change. Things to note this morning, from a structure standpoint, the market broke lower out of its prior range. Again, right, you kind of, on a longer time frame, obviously this is the SPX, right? This is the S&P 500. This chart looks different than the futures chart. So there's a little bit of different as far as looks. I'm always looking back and forth at both. Now, one could look at this as, right, we were breaking out of the highs going into yesterday, and then we big time failed, right? So kind of like a trap, bearish, candlestick yesterday. It's one day, so one day don't make a trend. But then if we look at that on the futures, which we will, right? As I talked yesterday, 7,010 was that kind of March futures contract high, and we came in at 7,675 yesterday on the futures market, kind of double topping on the futures. And then again, right, like just buyers threw in the towel, and you had this kind of, double top, to try failure look as of on the day charts. So again, the market broke lower out of its prior range. We'll look at that. And again, that shifts my bias towards selling breakout pullbacks rather than chasing weakness. The plan today is to trade rotation. I'm selling into resistance, covering into downside acceptance. We're going to look at this, like I said, in this opening, as this 60-minute chart, this range, we're going to look at that. And then again, we kind of have some conflicting issues where we kind of had like the day charts really not looking good as far as the hourly charts, which then looks different than the 5-minute chart. So you do have, and I remember this, I'm always remembering this early days of trading. We got to go back 15, 20 years ago, but it grinds into your memory that you'll never forget. And the things, if you're a real trader, you'll understand what I'm talking about. But where you're looking at multiple time frames and they're not in line, and then your mind will play these games where it's like analysis paralysis, and you don't know, you're kind of struggling one way or another because the same instrument in multiple time frames has these kind of conflicting looks to them. So, but I'm always a person that says, gun to your head, you got to pick a trade, and or you can just, not trade, sidestep until you get clarification. But in this game, right, I use this as a living wage, and so it's kind of like playing basketball or in sports. You might be having a bad day, bad kind of week, or you're just not feeling good, but you got to go out and play the game anyways. Like, that's just life in general, right? That's how I attack every day. And somebody might just say that's the wrong way to look at it. So I don't know. But I am selling into resistance, and then I'm watching this range to, one, what is going to win out? Is this daily, hourly charts going to win out, or the 5-minute chart, kind of giving me a heads up And then, right, we're going to be, selling more into, tomorrow, big non-farm payroll, and then into, right, going into next week. And, maybe the 5-minute chart is telling us some early clues, and, the hourly and daily charts just kind of, not caught up yet with the real move that's going to head. But again, I don't like to, going back to, right, predict too much, too far ahead. And again, it's about letting the market show its hands. So early sessions, we got gap rules. And then right now, it's aligning with day trade setup type number 4. And again, the most important thing today is not getting married to any single outcome, right? The levels that I want to talk about today is this 69.70 and a quarter. I'll show you why that's important if you're bullish. Also, I guess if you're bearish, like either way. But that 69.70 and a quarter is a big play in my trading going into today, and I'll show specifically why. So with that said, let's just get right into the charts. And we already talked about this. And again, right, that really looks like a revert. If today plays out and we open up and then we go down, this could kind of signify like that was the high and that's it. Again, don't want to get too far ahead. And if we look at the ES, so just so people understand what I was talking about, is here, right, 7,010. And literally, this does not look good. This kind of move here, if we take out Friday's low and the next coming like tomorrow or Monday or Tuesday, you know what I mean? And this kind of comes down and takes out that low. This pattern, I'll just say this pattern right, oops, that's too big. This pattern right here with this double top, and if this takes out this low, and again, I don't want to get too far ahead of myself, but we are looking at a day chart, that this really sets up for a meaningful push all the way back down into, targeting 6,600. So, even though we're making this, high, higher low, equal high, higher low, somewhat equal high, you know what I mean, and a low, but again, as this, comes down, we take out this low, I got to kind of lean not so much, again, just kind of think of pattern recognition. This, prices then, really has a high probability, that's the way I should discuss it, high probability of rotating all the way back down to 6,600, especially when we're, up here in this corner. Now, again, I could see somebody on an hourly. Let's just go to the hourly chart because this is the most important thing that I do want to reference. Sorry, I got to move my markers over. This is that range that this is that kind of range. Look at how large this distribution node is, right? So this distribution node is huge. And again, this is where it comes back down into that 66 or 68. Well, this goes to 68, and actually I should go lower, but this distribution just target 68, 68. I didn't go back far enough to show where that 6,600 is. But again, if we can't gain traction today, right, and really get above that 66.70 and a quarter, which is right here, right? If we can't get price above here and get back up into this area here, this is thin structure right here, right? We had Friday's close, and then this was Sunday opening up, and then Monday right here, right? And so this area here is thin structure. And so again, the overnight low And then that 69.70 is very, very, very important going into today's trading. Because if price rotates down in, there's nothing here to support. And this will just wash right through, right? And then again, now we're down in Friday's distribution. And, you know, we got non-farm payrolls coming in. And again, as we think, right, we have a low, a high. This is an hourly chart. Remember, 60-minute chart. Low, high, lower high, or higher low, higher high, higher low, higher high. And then yesterday, kind of, right, that late day just really fell apart. We traded in a range late, you know, late and early, late last night into this morning, and then again broke away in the overnight session. And we're opening up in a gap, right? So we're gapping, small gap. So again, as price opens up, does market participants get over the moving average? And that was also something I wanted to reference, is look at where there's separation between price and the moving average. And then just this last hour, right, we finally tagged the moving average. So again, there was some decent push off of, you know, trend to the downward. And again, this is the first touch, right? First touch since breaking down late day in the cash session. So as we open up, there's a small gap. So gap rules are in play. And then, you know, day trade setup number 4. If this meaningful breaks down and we break underneath low a day or overnight low, again, this just sets up the move where there's nothing here to hold this market up. And so that's the thing that, you know, again, you got to be nimble. Another way to look at this in the charts, we're going to go here, is this is again 69.70. Let me actually, I'm not, right, is this here, right? And so we're trading in and around those 50s, right? So we're trading in and around this high volume node, right? So this is Fight Club where we're trading, right? And we need to get above that. If you're a buyer, you need to get above 69.70 in today's action, price action, right? Where if yesterday was just, you know, late longs that were long up here, got liquidated, right? And again, very well possibility. I'm a little bit skeptical on the fact that, you know, we kind of slammed down in here in 61. It would have been nice on a bull case. We slammed down in here. I know yesterday, right? What was the, you know, level that I said that really needed to hold was that 69.61, right? That was the must hold for the buyers. I think the regular level was like 74 was the initial support, with 61 being the major. And then again, we broke down late day, and it looked like we opened up right at 6 o'clock and we got above a little bit into the 70s, or a hot, you know, low 70s, high 60s. And then again, traded and then fell apart. And then we're down in here. So again, like, you know, if you can easily see how this is playing out, right? Buyers couldn't get back above. And then, you know, even if we were like flagging into this morning, right, where they're rotating, and then we open up somewhere here, and then they, you know, get a little of a pullback, hold the pullback on the buy side, and then we take a march back up here. That would have been the ideal buyer setup, right? Where they liquidated down, and the overnight we kind of flag up, right? And then we open up, and then this low holds, and then we come back up here. That didn't happen, right? So again, there's some weakness in the market. So I just kind of want people to understand context of what's going on. Again, for anybody who's new to this, this is a weekly. These are weekly. I didn't mention. I always, sometimes I'm always thinking everybody's here every day, same people or whatever, and then there could be somebody new. So if you're new, these are weekly distribution nodes, right? So on market profile. So this is last week's profile, and this is this week's developing profile. So anybody new, at least you know what that looks like. And again, if we go to this chart, right? These are daily, this is the daily profiles. These are daily profiles. And again, right, Friday, right, we kind of get, that Sunday into Monday, right? And we made value. We opened up on Tuesday, higher value, and we had overlapping to higher value, and then prices opening up way down here, right? So again, if price can't get above this, and you had single prints right here. So you got single prints right here. If we can't get above this and back up, sellers are going to kind of, again, when I look at the, I'm going to show you guys market internals. But when I'm looking at the market internals, I don't see sellers aggressively coming in here. What I see is just buyers not buying at the, index level. I don't see where it was sellers kind of pressing. I just kind of see buyers. I saw buyers just not buying. And so, right, those are two different things, right? And so, again, when you think of like old business and new business. So yesterday's price action, when I look at that, let's just go look at that now. Let's go back to the dashboard. Let's go back here. Okay, when I'm looking at this, yes, there was some negative volume outflows, right? The ADSPD, right? You did have we opened up, slammed down, and then we hugged this down here at the bottom. But in that in the late day, right? This didn't really, we didn't get into negative 450s, negative 500 on the ADSPD, right? We just we didn't even take out the low, right? The morning low in the ADSPD, right, came down, slammed down by like 10 o'clock at negative 282. And then even though price, right, as the day progressed, let's look at how the morning on the S&P 500, we opened up, we went down first, we went up, we came back down, we chopped, and then we really, right, sold off into the day. And that's the kind of on a 5-minute chart, right, which again is what this is. That was the price action. And then what did we get on the ADSPD? We had price kind of shift down, or not price, but right, the advancers minus the decliners kind of shift down first early in the morning, right? We had that little bit of a rally. And then when price really broke, we didn't even get and break the earlier low of day in the advancers minus the decliners. So again, and then when you look at the tick, right, a merely negative 318, you would have thought if there was more selling coming into this market, then you would have thought, or you would have seen this tick. You wouldn't have thought. You would have seen the tick. Kind of this be like a negative, like 10,000 or negative 15K. right? And instead we're at negative 318. That's light. And so again, this is I want to make an argument that you didn't have new business, new selling, right? What you had is just buyers not buying in the market. And so now, going into today, that's what we're watching for, is do they defend and we go back here, go back to, let's maximize that. Let's delete all this. Let's take this to an hourly chart, right? Do we make, do they defend this and make a higher low, and then we are going to take out that as buyers buy this? Or as we're watching, right, do sellers, new business come in and sellers push this down? And that's the thing that you're going to want to, in real time, be assessing. So now as it comes to this morning, right, and how I'm trading this. So now let's go pathing. Oh, trigger chart. What time is it? 9:03. All right, we got a little bit. We got some time. As I'm looking at pathing, let me zoom this in, right? So 69.70 in the quarter is that, right? Reaction LVN to watch. That's what I'm watching for. We have gap rules in play, just a small gap right now. Maybe within a half an hour, right? We repair this gap and we don't open up in a gap. Yesterday's low was 69.59. So again, we're at 69.55, very small gap. Could easily, as we open up, not have a gap. And that's just it. Do we have a gap? Not a gap. That's the first trade. Excuse me. And then I'll be watching that. This level I'll be watching. And again, on the hourly chart, you got that moving average kind of coming down. And again, do sellers start initiating orders and this thing really starts selling off, right? The first marker is going to be the overnight low, right? Now, or do we get kind of open up and get up, right? And so I'm going to be very patient and I'm going to let the market tell me. So either one, I am picking a side off the bat. I will be looking at sell entries first, unless we just open up, right? And if this does where price comes up, gets above 69.70 and a quarter, pulls back and then gets up, and then we're up in here. You know what I mean? Like, then that's it. Like, I won't be, if something like this, I won't be selling. But first I'm going to be watching price. And as we get up into this area, I'm going to be really watching the market internals, watching price action, watching how the volume profile is being developing. And, does this look like a good right spot to then sell? And then, right, and then I'll be targeting overnight low. But really, that's just a kind of like a confirmation that I'm in the right trade. And then looking for extension, pullback, and then go, and then this thing just really kind of start, right? The wheels fall off the wagon. That's kind of day trade setup number 4, gap rule in play, whole 9 yards. So this is kind of first idea. Now, where this gets, right, where I'm wrong is, again, we get up in here, chops around, probably get some two-way action as it chops, and then price gets above that 29.70 and a quarter, pulls back, and then right where we get sucked back into 69.90 and 3/4. And then right, really this will be first confirmation of 70 and a quarter, and then price gets into 69.79 and a half, and it's off to the wheels, and the buyers, come back in. And again, where buyers, late buyers got a little bit of long liquidated, institutional buyers came in, defended this area, and we get back above. So I don't want to say today is fairly easy because, again, trading is not nor easy nor hard, but on a spectrum, right? If this was easy and trading over here is hard, today's setups are kind of over here, right? So this being the middle, today is kind of in the easier camp than the harder camp. And hopefully this helps you out with like analysis paralysis, right? So come in with a game plan, understanding structure, understanding, where are you right, where are you wrong, confirmation, all these things. If this happens, then that. And then, looking for progress on however you're long or short, right? Is your thesis playing out like you had planned? Or if not, get the fuck out of the trade. Oops, sorry, dang it. Got it. YouTube doesn't like swearing. So get the heck out of the trade. So, but yeah, that's the pathing ideas. That's how I'm trading it. Those are those things. And again, this is an education. If you want to know like structurally how day trade set up for, what to look for, the variables and everything else, right? That's on the website. All my day trade setups are on the website. Each setup has rules, what to look for, and how specifically to trade each setup. So those are there. That's not for, these mornings, astute traders. Once you know the setups, then getting into all the nitty gritties and what to look for in real time, that's where there's other training for that on the website. So with all that said, you know what? Really quick before I go, we got a few minutes, and let's look at crude really quick, because I am watching this. So yesterday, a lot of my trading was on crude more than the ES because I was managing my position, right? As I told you guys yesterday, that kind of 56.75. And so I had to kind of like, really day trade a little bit of my position. And now I'm down at like 56 and some change, down at the lower end. 56.20 something. I know I'm under, I know my position is under 56.30. So right now that's where I'm laying, as I had to kind of buy, sell, trade, and really get my dollar cost averaging down in the lower 56s. So, that Tuesday's breakdown really, was not very nice to me. I kind of gave, I didn't, obviously I was really good because I was down at like 55.75 earlier, like way back a few weeks ago, and I still had that position on, right? I'm still trading. I'm in, I got in around here because I'm in, right, the G26 crude contracts. Those are going to be expiring here fairly soon in the next week or whatever, because you're going to have contract roll. So either I got to roll these contracts or, get out of the trade. But I was really good, and I was playing around, took some off up in here. Actually, it was not. I took some off at $1 at 57.80 or 57.80. And I did not take anything off in here. And every time it hit 58.80, this 58.40s, I did not take off. And then I thought I was really positioned well on Tuesday. And then this happened, which, really not that these are unrealized gains. I took off some contracts on realized gains, and then these were unrealized gains, and then kind of pulled back on me, and then I was managing the trade yesterday. So I like today's price action so far on crude. And again, I'm going to be watching this. I really would like to see energy and crude get out of this 50 handle and get back into the 60s. And that's why I haven't taken this trade off is, I'm bullish energy, and I'm wanting to see this, this undercut when this happened, right? That's why I got into the whole position in the first place at 55.75, was I liked where you made the low and then it undercut and then came back in. And I was like, maybe that was the energy, right? Trade. And that was the undercut for oil. And then we're going to, see oil back in the 60s, So if we look at that also, let me show you another way to look at this too. Oh, let's see. Sorry. I'm trying to think of how to show you this. What do we got? 9:15. Okay, we're still here. Oh, okay. So again, when we're looking at the distribution, right, we're up here at $62. That's where fair value is, right? The point of control is at $62. So, as I'm watching this, I just want to be participating. And so where, I really thought Tuesday this was going to open up and we were going to finally get it up and go. And then lo and behold, that was horrible reaction. And then I just didn't get out of it, even though, I would have took the profits and been done with the trade and just kind of was like, hey, small gain, I'm holding in. This is like the line in the sand down here is where I'm wrong, right? Underneath 54.89 is where the trade, I got in at 55.75. And this is where I told myself, this is where I'm wrong. And this was the risk that I was willing to risk when I initiated the trade. We played around up here. I took some profits off. I wanted to get above that 58. That Tuesday, Wednesday, pulled back. And, right, this has got to, I really don't want to see yesterday's low get taken out. We're opening up at 57.05. This needs to kind of hold that low and then get up and up. And again, I'm targeting this. But again, we're going to have contracts coming in here where we're going to get the roll into net, so either one, depending on where price is, I'm either going to cut this off or I'm going to roll. And then, right, again, still trying to target that $62. So again, just kind of giving you guys a little bit. I know we talked to ES a lot, and I put on trades on, other futures, milk, crude. I mean, I got a whole list of futures that we trade. Right? So, this is the whole list. And, so that's the list. And so every so often, right, picking other futures, other commodities for, again, thinking trend. So, this just goes into, trend following. So, yeah, other than that, let's look at rates really quick since we're right here. And again, this is my thesis where I think the narrative is wrong in the market, and I feel like this is where this is the 10-year rate, right? 10-year note. And again, where this just looks fairly bullish. We kind of have the high water mark up in here at the high 4s. So let's just call this 5%. right? And let's just call this like 4% down here. And, you know, when I look at this chart going back a few years, you know, this just looks like we're down at the, if we were to break this up into thirds, right? We're kind of in the lower third. This would be the mid, right? And so this just doesn't give me the look as if this is going to break down. And again, so when people talk about mortgage rates, you know, I could tell you a story and I can tell you a narrative. You know, we can get into qualitative analysis where I'm just giving you a narrative and story. But if you look at this in a, you know, kind of the quantitative, you know, data where market participants are putting their money where their mouth is, this doesn't look like a clean look to the downside. This more looks like, right, we kind of came down, lower low, you know, this looks like a higher low, and then we made a higher high, and we're just consolidating for then the push up and out. And so it's that up and out of the higher rates is you know what I'm seeing. Now I don't know what the story is and how that plays out. You know, is it you know, market participants are worried about our debt, national debt? Is it the bond vigilantes? I don't know. Is it, you know, there's more inflation coming in the future? I'm not here to tell you stories. That's not, I don't do that. I'm not a good storyteller. That's, you know, every time in business, I talk to my marketing department and they're like, Jay, you got to tell good stories. You got to tell a story. You got to tell a story. I am the worst at storytelling. I am a math dork. I sit behind the screen. I chew on math all day long, and that's it. And so, you know, I hate, I don't want to say it. I do read. I hate reading. And, you know, I'm just not a good storyteller. I've never been a good storyteller. I've never been a good bullshitter. I'm in your face, tell you how it is, and you know, you either like it or don't. I don't give a shit. Dang it. Anyways, so yeah. So mortgage rates, you know, if the 10 years kind of lifts up, I mean, I think, you know, you're going to see the 30-year mortgage rates lift up. And I know that's different than what everybody's talking about. So anyways, it's 9:20, and if you are a trader or real estate investor, you know what I mean, come see us. Or if you're looking for mortgages, come see us at Myrtle Beach, right? Schedule in-person consultation with us. Again, here's our office in Myrtle Beach. Phone number for the office if you want to be a little bit not in person, you know, email us. And then here's the day trading website for any kind of resources to day trading. And then here is the private equity Pries Capital website. So with that said, as always, learn, trade, profit, and I'll see you guys on the next one. Good morning.